And good morning, everyone. This is Brian with Strategic Trading, and I'm back once again for your daily report, guys. Okay, we're going to do something a little different this morning. Uh, it is currently around 4 a.m. my time, and I'm just getting up, and I'm looking at a chart of the S&P 500. And I want you to pay particular attention to the last candle that you're looking at. Now, that big drop right there we're looking at a 15-minute time chart, and that was the close of yesterday. Okay, 2782 was our close, and this presents us with a simple buying opportunity. First of all, the S&P 500 is a weighted index of the top 500 companies in the United States, and it is a significant benchmark for the economy. So the S&P 500 is huge. Okay, very huge. Now let's go back and look on a yearly basis at what we have here. Huh? Well, okay, that's a 1 year. Let's look on a monthly basis. Now you see on a monthly basis, and you can go back further on a yearly basis if you want to. The S&P 500 has consistently risen. Okay, it's a consistent riser, and had you bought a position every day going up for the past 20 years, well, you would have made a significant amount of money. Now there would have been points in here, obviously, that you would have lost some, but you would have gained that back and then some clearly. So the S&P 500 has a natural upward bias along with the entire stock market. It has an upward bias. So we're going to take advantage of that upward bias by looking at the fact that today on the 15-minute chart, we closed out on the 15-minute chart with a big, huge red candle. Now, could this be a correction? Yes. Most likely, it is an unwinding of positions, and we are looking at a possible, now I say possible, rise up. I look at this as a buying opportunity, guys. Period, point blank. I look at this as a buying opportunity. Now, there are several ways to play this. There are several ways to make this happen, and I'm going to show you guys what I would do with this. Hold on 1 second. I'll show you what I would do. Okay, guys. Now, what we're looking at right here is a price ladder for the S&P 500 on the Nadex platform. Okay, now this is the demo platform, but they have the exact same strikes on the live platform, and this is what I would do. In the blue, if for those of you who don't know, the blue represents a buy. You want the price of something to go up. The red represents a sell. You are looking at the price to go down. On the blue, the price that is shown is the amount of money that you have at risk. The red shows the amount of money that you can make as a profit. And together, those two numbers will represent $100. Now, in this case, we also have two other options. We have an in the money and an at the money. Okay, and out of the money. So we have three options: in the money, at the money, and out of the money options. Now, if you guys don't know what those are, I'll show you real quick. Now, first of all, we believe that the price is going to rise. So, the way that we can play that is first, we look at what its current price, 27.82, and 27.83 they have right here, and it is $64 at the money. That means you would put up $64 and you would win around $43, $44, $46, if you were right, and you would make the remainder of that. Now, that is at the money because that is where the price currently is. The next way you can play that is an in the money. This means that you drop down below to, say, $27.80. Okay, you would pay $75 for $27.80. You have a possible risk, a possible reward of $25 because each contract is worth 100. You're paying 75, and you could make $25 off that. But your contract is already good. That's why it's in the money. Okay. Now you can also drop down to 27.77, and you could purchase one for $84. Okay. Now that purchase for $84 is going to get you 84.25 is going to get you around $16 in profit, and that contract, mind you, is well in the money. Price is 27.83, and you're at 27.77. Okay, and that says that price will have to fall below 27.77 for you to lose that trade. Anything above 27.77 is winning. Now that is in the money. We're showing you at the money. Now you look at the last one, which is out of the money. Out of the money means that we were looking for a contract that price has yet to achieve. So it is 27.83 for $54. We can purchase 27.86, and for $43 we can purchase 27.89. Now I personally think that 27.89 is a reasonable out of the money call. I think it is reasonable to assume that price will reach up there, and that is the way to go. We're currently at 27.86, and we're looking at just 3 pips for $43. Okay, or even further up, we can take 27.92, and we're at 27.86. We're talking about 27.92 for $35. More reasonable. This is the trade that I would take. 27.92. I'm risking $34. In this case, I like to get 10. I'd be risking $355 for a possible gain of $662. And that is the trade I would make. Now, one of these things, let's go ahead and place this trade. One of these things that you have to remember, people, is that with Nadex contracts, there we go, got it. With Nadex contracts, you do not have to wait until expiration. Now, if price moves up significantly, in this case, only a few pips, every move closer to that strike gives my contract what is known as intrinsic value. That means that it is more than likely to be right. And this increase in intrinsic value can be profited on by closing out some or an entire position on the move. So I'm going to be looking for a price to move up today on this deal, and I'm going to be looking to take advantage of that the best way I can. And that is through this contract. Now, as I've shown you, we had in the money, out of the money, and at the money. You can choose any one of those that you want to, or you can actually go the other way, guys. I'm not an expert in what the S&P 500 is going to do. I'm an expert in how to trade, and that is how I would place the trade, and that is the reasons why I would place the trade. So I have an entry, I have a fundamental analysis, I have a technical analysis, and I have an exit strategy. I have a risk parameters that I'm willing to extend to. I have a profit zone that I'm going to take from. So there are all the elements needed in my decision to take this position. If you are a trader and you don't have all of these things when you go into a trade, I don't care how small or how large, what product, indice, currency, equity, whatever it is. If you do not have that process in place, you, ma'am, sir, are wrong. You are 110% wrong. And if you got any money, you got lucky. And if you lost money, well, what did you expect? Now, will I make money on this trade today? No telling. I mean, it might be profitable, it might not. Will I make money trading every day on the S&P 500 or anything for that matter? Absolutely. Absolutely. So, guys, that's the trade I want to show you today, and we're gonna come back. We're gonna do our insurance trading. We're gonna do a lot of things. So if you haven't joined, make sure you do so. We have some great stuff going on. We're right now with our 40 people in there, and we're doing a group trade, and I'm looking forward to getting everything going, guys. So let me out here early